Hello, my name is Martin Peter. I'm from the Ministry of Finance, and I would like to use this opportunity to somehow open the conference. Why? It was a tradition that representative of the Ministry of Finance had the opening speech, and I want to honor this tradition. More importantly, I want to honor the tradition of Finweek, because I think it's the 6th year that FinTech Innovative Conference is held in Bratislava. We are lucky to have the opportunity to cooperate with FINAS along with the National Bank of Slovakia. Why it is important to have such, and I want to thank David Čajko and FINAS and Tech Events for having such conference in Bratislava. Why it is important? I believe that innovation is something that pushes us forward, and I think especially in these times we have COVID, and it was great that we was also during the COVID period. We have war, we have energy crisis, and I'm from the government, so I would like to say that we will try to do our best to help, but I think in most cases the business and the civic society comes with solutions, and innovation is very important in this regard. So I think and I hope that this conference will help for you to meet together, to discuss things together, and maybe to come with a solution that will help us to go forward and to cross the very, very difficult period we have ahead of us.
Thank you, Martin Peter. So to begin with, we'd like to thank the State Secretary Martin Peter for the introduction to the conference. And as a moderator, to make this conference possible, we have to thank our partners. The Ministry of Finance of Slovak Republic, National Bank of Slovakia, Visa, Binance, Blick and 365 banks are the main partners. Supporters include Porto, CRIF, Slovak Credit Bureau, and Fumbi. And we have an expert guarantee from FINAS, FinTech InsurTech Association of Slovakia. So we have to thank our partners to make this conference possible. It's the 6th time, second time I'm moderating here at the conference. It's a privilege to be here. It's amazing how many fantastic, good speakers with lots of knowledge to share we're able to invite to this conference this year. Therefore, I declare the conference open. I would like to introduce our speakers in the first panel are here. That will be Petia, Niederländer, Director for Payments, Risk Monitoring, Financial Literacy at the Austrian National Bank. Welcome, Petia. The second one is Anikó Szombati from Hungary, Executive Director for Digitalization for the Central Bank of Hungary. Digitalization is a really big topic nowadays, so it will be it's great to have you on the panel. And then we have Martin Brunko, Executive Vice President for Europe for Binance. Please, Martin, welcome. The topic for today, for the first panel, is Cbdc, Digital Euro. I'm sure you heard about the project about Digital Euro. And the great thing is we have some experts here, but we should not forget the online participants here. Peter Paulus, Head of the Financial Unit, Permanent Representation of Slovakia to the European Union. Welcome, Peter.
Hi.
Markus Hertel from Germany, Market Infrastructure Expert at ECB. Welcome, Martin. And Jonas Gross, Chairman, also from Germany, Chairman Digital Euro Association, which is also taking part online. So let's hope the technology works and you'll be like if you're here in the room. So, what is all this with Cbdc about? What is the main purpose of Cbdc? We can start with Anikó. You can make the introduction here to what Cbdc is all about.
Thank you very much, and thank you for inviting me. Actually, I'm not only responsible for digitalization, but also for fintech support at the Central Bank of Hungary. So I feel very honored to be here, and I would like to wish all the best for the Bratislava fintech community here. So, but back to basics on central bank digital currencies. So everyone is kind of visioning that central bank digital currencies will be present and actively used in 10 years' time now, for example, but nobody knows how we will get there. So for what reason and at what jurisdictions the central bank digital currencies will appear and how will they spread across the globe, probably. Right now, we have rather few countries who already implemented this scheme, like the Bahamas, for example, and some major jurisdictions like China has very advanced pilots already in approximately 22 major cities, but other jurisdictions and regions like the Eurozone or the US are considering the issue very seriously, but we cannot really foresee any exact date when the decision there would be made. So just to highlight that, in my opinion, there is no one single type of CBDC, so we can differentiate among retail and wholesale CBDCs, but of course in the retail realm there must be also differences because we have already a very developed electronic payment system almost everywhere, and we also have the cash. And why would countries need a central bank digital currency? Actually, they have to find a very exact market failure or a very definite policy objective that would drive such an influential project. So worldwide, I do believe we can identify 4 major motivating factors. First and foremost is the increase of or promotion of financial inclusion and make electronic payments available for those who are currently unbanked or underbanked, because we also have a huge population who formally has access to the current banking network, but they are not using it for any reasons. As a second, there can be a motive to promote competition in the payment market and also to pave the way for the future of finances, for example, to set up an infrastructure that can embrace smart contracts and all kind of developments where the payment can also attach other functionalities and new business models can be developed. As a third, I would mention the issue of monetary sovereignty. So quite a lot of countries are developing the project because the others are developing, so that they don't want to be left behind and don't want to see themselves in a situation when the other countries' CBDC will spread into their own markets, or even the big tax initiatives, stable coins, would take up the role. And as a fourth motive in the COVID area, we understood that there could be a need for a countrywide system where quick electronic targeted subsidies can be distributed to the citizens so that they can be supported in the isolation, for example, and also the economy can be boosted with fiscal support. So I would stop here. Thank you.
Thank you very much. I would like to ask Jonas Gross, which use and case does CBDC have according to you?
Yeah, thank you for the invitation and for having me. And I think Anikó really covered a lot in the answer, so that basically all CBDC projects are kind of different. So we see that in some of the Caribbean islands, as in the Bahamas or the Eastern Caribbean, there are already live CBDCs or CBDC prototypes that have a clear use case when it comes to financial inclusion. So get more people access to financial services. Also, when it comes to decrease the costs for payments, because very often in these jurisdictions there are natural disasters. So if you rely on cash, you basically have an issue if there is, for example, a hurricane or an earthquake hitting, which I think is very, very clear use cases from my perspective. When it comes to advanced economies, for me, it's currently, a little bit more puzzling, but also would be very interested to hear what Markus basically can add to this, because I think what's very important in advanced economies is that a retail CBDC we are talking about today is, at least in some dimension, better than the current forms of money we have, right? So it needs to have some features that today existing forms of money don't have. To drive adoption, because we have seen that actually in Finland and also Ecuador, there was a live CBDC actually 10, 15, 20 years ago, and they did fail because adoption was really, really low. So I think it's really important to figure out that kind of in the sense we have a system where something can be provided better. It can be better in terms of privacy, also in terms of offline and online payments.
One follow-up question, Jonas. Do you see the use of digital euros or outside the Eurozone, so give access to people outside the Eurozone, access to euros in an easy way through digital currency? But inside the Eurozone, most of us are banked, most of us have payment methods and so on.
Yeah, that's a really fundamental question. And as far as I read some reports by the ECB, this is currently for the initial project out of scope, and there will be limits for people from outside the euro area. But I think that this can be a valid use case as well, because we do see, for example, with China, that a CBDC can also be used to basically increase the importance of the own currency, right? And we see that in current times in sanctions, that a digital currency can actually, provide tremendous support for an own currency. So I think if one of the goals, but this has to be decided by policymakers, is to also increase the role of the own currency in an international context, then also access to people that are non-based in this currency union should at least be considered very highly.
Thank you, Jonas. Petia, Niederländer. What is Austria's take on a digital currency or digital euro? What do you see as the risks and the advantages here in Central Europe?
Well, we are part of the Eurozone and of the Eurosystem project, so very close together with the European Central Bank and the project of retail CBDC. And before coming to the question, I just want to point out that major goal of the project is to have resilience, monetary sovereignty, and strategic autonomy in Europe. We do see the last couple of months and years that strategic autonomy and resilience is very important for the economy. And if you think about the retail CBDC, because there is a wholesale one, which will serve trade, which will serve the international flows, which may help euro to become more let's say, major currency worldwide. But if you think about the retail one, is how the people pay in their daily life. And here is Austria a very, let's say, one of the very special countries, because it's very conservative. We had a lot of cash there, which means we had a lot of central bank money in circulation, right?
Yep.
So we had not so much competition of the business model, because the central bank gave people means of payments. They went to the shop and used it out there. The pandemic learned us that this thing can change much quicker than we have expected. So in Austria, the usage of cash and point of sale decreased from 80 to 60% during the pandemic. And there is a certain tendency of going further. maybe not that quickly, we have to admit, but the time is passing. So for us, the retail Cbdc or the digital euro is opportunity to have a competition of business models. That means that we would like to see on the point of sale, particularly, and in the everyday purchase of the population, more innovation from the financial sector, more competition, not just two big techs competing and sharing market shares, but really to have this kind of resilience which ensures that in case of further developments on the global geopolitical markets, we are capable in Austria and Central and Eastern Europe to sustain it, to be independent, and also our financial institutions, our banks and intermediaries are involved and well equipped to compete with this kind of big techs and progress tendencies on the market. And here we believe the central bank money supply from the central bank in form of digital euro is essential, because we may not end up having 80% Cbdc, I guess, but yet there is a fair and healthy competition which ensures that the whole ecosystem is developing and delivering value for the population and for the financial sector.
Thank you very much. Now I would like to bring in Markus Hertel as an infrastructure expert at the European Central Bank and what his general take on the digital euro project. If this is seen as a payment method, or is it a real currency store of value? How do you see the digital euro project currently?
Thanks for the question. I can only say Petia summarized the overall idea perfectly well. And as the others also said, it is a complex project overall. Definitely, it is supposed to be, at the end, it will be a payment instrument. That's the idea. It's not supposed to be a huge store of value, because we want to facilitate people having access to central bank money, to have this monetary anchor and be able to pay with it. Of course, the final instrument should be provided by the market. That's not our idea that we know better than anyone else how this should be done. We will facilitate what is needed to have this instrument, to enable the market to innovate on it and to release payment instruments to the public, which can utilize and facilitate our digital euro, which we provide. And the idea is, as Petia nicely put it, that we want to ensure at the end of the day that with central bank money, you can pay everywhere in Europe, so that you have this confidence that I have a payment instrument which is European based, where you know it's central bank money, which is provided by your well-known institutes or other entities which might be regulated to be allowed to issue this. So that you know, if I'm on holidays, I don't have to bother. I don't have to question myself, will my national solution be accepted? Maybe the national solutions will even take up the digital euro and integrate it. We will see. Many, many open questions here, but it will definitely, to come back to your question, it is to be a payment instrument, something what you can use in your daily life.
Thank you. Now, seeing that it's a payment method, what do you think about using digital euros as cross-border payments to the Eurozone from outside the Eurozone, where the banking system makes it maybe more difficult to use euro payments and so on, because of the cost of buying euros, etc. Could this be a way to basically strengthen the euro as a reserve currency and a currency for transactions?
Yeah, it's definitely a interesting thought, but Jonas put it already in perspective, and you have to understand we are central bankers, some of the most cautious people on this planet. So we move ahead step by step. We of course think about many, many options, and many options are still on the table, and we discuss them. We discuss them with Petia, we discuss them within the euro system, and we listen to many many actors, but at the end, it is a huge endeavor. It's one of the biggest endeavors since the release of the euro, or since the introduction of the euro. And so we are cautious, we move ahead on site, so to say, and that's why for the first release, as Jonas put it, we do not really envisage yet a very broad scale. There is no decision yet made, but it is very likely that we will concentrate on the euro area at the beginning.
Okay, thank you. Now I would like to have Peter Palos online. He's head of financial unit at permanent representation of Slovakia to the European Union. What are the main challenges you see for the policymakers when it comes to digital Europe?
Thank you very much, Johan, and good morning to everyone. And let me also thank Finweek for the invitation, and it's really a pleasure to be part of this panel. So, in my first intervention, I would like indeed to focus on the challenges or triggers or drivers behind the Digital Europe project. I can describe the process as from reaction to action, especially as I see the factors or the drivers of a mostly external nature. 4 brief points: monetary sovereignty, financial stability and resilience, financial inclusion, and transformation of finance. So briefly on all of them. On monetary sovereignty, there was and still there is the risk that the public money could somehow lose its role as a monetary anchor. And here in this regards, the wake-up call was the intention, as you may all recall, of Facebook to introduce Libra. You may also recall that it was stopped. It was stopped in the US, in the Congress, and it was stopped also here in Europe. So there was a statement of ministers of finance in 2019. But this can be called, or this can be seen as a wake-up call, because this triggered many, let's say, developments and accelerated the process. In this regards, I would also like to mention there are 3 factors which needed to be taken into account when we speak about monetary sovereignty. And so there is the risk or the competition with private solution. So big tech companies with large consumer base, and this market is dominated by few players, and unfortunately outside from the EU. So this is something what should be taken into account. Secondly, third country development or the development in other parts of the world, especially in China. And here is the advantage of first mover. So should there be a CBDC in other corner of the world, which will be recognized, it can be at the cost of the international role of our currency. And third element which should be taken into account when we are speaking about monetary sovereignty is what was already mentioned by Petia, and that's the strategic autonomy of the EU. And I can give here as an example, for instance, the decision of former US President Trump, when he withdraw its support for the nuclear deal with Iran. And here in Europe, we were unable to continue in our transactions. So this is also very important when we discuss about monetary sovereignty. Secondly, and that's the second, I think, very important driver, is the financial stability of our financial sector and its resilience, which should be safeguarded. So we should do our utmost to not undermine the lending capacity of our banking sector. And as most of the European banks are deposit funded, we should avoid any kind of possible digital run. Third point, and that's the financial inclusion, which I have mentioned. And I can here also echo what was already mentioned also by Anikó. So we should have the intention to introduce a digital currency from which all, let's say, part of the society would be able to benefit. So it should be accessible to all, it should also take into account people with limited access to digital payments, and I think this is very important, let's say, driver and also element which should be followed. And here I can take the example of the introduction of the current parking policy in Bratislava, where you are unable to park when you don't have smartphone, internet connection, and internet banking. So, and I've experienced this with my mother. So we should really take into account the principle of financial inclusion, which is very, very relevant. And last but not least is transformation of payments, and this is connected, of course, with financial innovation. So there is a development of e-commerce. It was accelerated during the pandemic. There is also consumer preference for cashless payments. This should be taken into account. So there is a strong demand for secure, riskless digital payments. So this is, I would say, also very, let's say, important element. And with the possibility or the idea to establish digital euro as a payment system, which will serve as an anchor for the whole payment system, we can, let's say, accelerate the digitalization in EU, especially in Eurozone. Let me finish by quoting the current governor of the Fed, which I think is also very important to have in mind. And that's the more important is to get the digital currency right than to be the first. And this is, I think, something which also should be somehow taken into account when we have the discussion in Europe.
Very good, thank you. Just as a reminder to the audience, we use Slido here if you have any questions. So hashtag Finweek on Slido if you have any questions, and I will see your questions on my telephone, and I can make sure to bring up those topics. Martin Brunsko, Vice President for Binance, the largest, most well-known marketplace for cryptocurrency and digital tokens, etc. What's your take on central bank digital currency?
So I was going to start by saying that the Cbdc's, they are like unicorns. Everybody loves them, but nobody has ever seen them. I think this would be probably a little bit unfair because, well, there are some places where you have them. But I think a better comparison is that they are like fully autonomous self-driving cars. People have been talking for 10 years now about these amazing self-driving cars that nobody needs to drive, and how they're, in a few years we'll all have them and life will be so much better. 10 years have passed, and you can still see them, but they're very crippled in a way. They're definitely not fully autonomous, or if they're fully autonomous, they are just working in very, very limited small places where most of us usually don't go. So I think the problem we have is with this thinking of we need to get this right rather than be first, is that, well, then the world moves past you and it might be too late. Certainly, I come from also a tech background. So this is definitely not how Silicon Valley and the tech world thinks. They're actually, you want to get things out fast. You want to get them right. You don't want to make catastrophic mistakes. But then you just sort of iterate. And I think if you look at now where these Cbdc's are working, well, Eurozone, nothing. Europe, Sweden was actually quite ahead quite a while, but that sort of fizzled out. Eurozone, well, we've been discussing it. And then the places that actually do have them, well, one that hasn't been mentioned is China. China is really advanced actually when it comes to Cbdc's and programmable money. They've not only been just kind of experimenting, but actually using them at a reasonably large scale now, dropping them in certain areas, like literally programmable money. So I think where we're kind of headed is that, and again, just to remind everyone, I also used to be in the government, so I was deputy finance minister, so I'm definitely not anti-government, but my sense is that at least in Europe, we're heading in a direction where the private sector will take over. I think with MiCA and the framework now in place for Euro stablecoins, I see that Euro stablecoins will start and become very big very soon. It's not the same thing as Cbdc's, but I think it's kind of the closest thing. And I think one final point is, I think the one it's important that we actually, when we do the CDBCs, if we're going to take all this time, that we do get it right. And getting it right also means getting the technology right, not using the technology of yesterday, but using the technology of today. And I think this is why I don't want to, again, sound like a fanatic here, but I think we'll probably all agree that when it comes to financial technologies, blockchain is the technology of the future. I would be very concerned if the Euro CDBC, central bank digital currency, is actually not built on a blockchain, which is quite not clear yet whether it will be or not.
Okay, interesting. So you believe that private stable coins will move so much quicker, so there won't be any room for a central bank issued digital currency?
So not really. So that's not what I said, but I think there will always be room for them to coexist. But there is this sort of also a kind of a first mover advantage. And I think there is a huge space and demands for CBDC. And if the central bank doesn't issue them, I think we're now in a situation where it will be now really the private sector that's going to push the stablecoins forward.
Interesting. We'll come back to Anikó. What do you think about central bank digital currency in the Visegrad 4 countries, in the V4 countries? Is this the place it will start? Is Bratislava, Budapest, is this the fertile ground for this innovation?
Well, by definition, it is a very fertile ground for innovation. I feel very sorry for that, but I don't see such a strong cooperation among the Visegrad 4 countries in this regard either. So I would like to urge all the colleagues to come together and hold workshops on the issue. So I can elaborate a little bit on what we at the Central Bank of Hungary are doing. So we try to follow the advice of Peter, and not just doing desktop research for our own, but we are going to the market, collecting real customers and collecting real experiences on how to develop such a system and how to attract the customers, because everyone is afraid of the CBDC becomes so popular and to actually take over the role of the banking system as a whole. But we are not there yet. We are about to come up with a new system which will coexist with the current system, where all the customers have the reliable and convenient means of payment, more or less. So I think when the central bank wants to introduce a new product to the market, they really have to be careful of serving all the needs, relying on the most recent technologies, probably providing additional functionalities or possibilities for innovation, and it has to be really cheap on top of that, so that there has to be a price advantage as well. So at the Central Bank of Hungary, we are trying to launch projects which are limited in scope, but still we can learn from them, and we can embed all these new technologies into the central bank infrastructure. So we launched a very nice modern money museum in May. You can come to Budapest and visit it. It worthwhile. And along this project, we also developed the Money Museum application, which on the one hand guides visitors to the museum, but on the other hand, it is a digital coin registry based on Hyperledger Fabric technology, and where the Central Bank of Hungary, from among the very pioneer central banks, issues an NFT already for for those who are enrolled for the application and filling in quizzes in the realm of financial literacy. And so you have to collect the 6-letter series of forint. And when you are collecting, of course, these coins are distributed randomly. So you have to cooperate with all the other participants. And when you have the whole series, that you can enroll for a physical coin set of 5 forints commemorating the 75th anniversary of the issuance of forint. And this physical set will have a specific QR code, and you can register it on the blockchain. And in the future, the money mint of the central bank is planning to issue more and more coins with the specific QR code, and the whole collections can be registered on the blockchain. And this can also teach us a lot about the technology and also about how to serve the customers. But we are also having a different project running since September 2020, and it is called Digital Student Safe. And we are approaching primary school year students, and they and their parents are downloading the app and using also it for financial literacy projects. And as a reward, the students can also collect digital stamps, actually, and these stamps can be later on spent in a specific web shop. So in this regard, the central bank is already running a basic current account for the little children who are, on the one hand, doesn't have the legal opportunity to have a bank account or the card, and on the other hand, will be the future users of the payment system, and we can include them into the electronic means of payment, into how to collect and save money in these digital schemes. And also we can gain experiences on how to set up a KYC, AML system, how to interact with the customers, how to set up the customer journey, the payment flows, the KYC flow, and how to design actually an application. So this knowledge will be collected at the central bank and will be used whenever a bigger scheme will be launched. But this scheme will also be enhanced just in a couple of weeks. The Central Bank of Hungary will become an e-money issuer. So we will provide e-money wallets for the children and for the parents, and real money can be used in the system. And of course, via QR codes, these can be spent everywhere in the country.
Very interesting. I have a question for Jonas. Cash is privacy. Cash is hard to track. Which role should privacy play around central bank digital currency? Should it be like with paying with cash? Nobody can trace it. Or what privacy rules should be in this area? Because the reason many people want to use cash is how to track.
Yeah, so thank you very much for the question. And I think privacy is one of the particular important, let's say, design requirements for a digital euro, because we have seen that, followed by a public consultation of the ECB, that privacy is demanded as like one of the most important requirements from European citizens, which I found very interesting. So it should definitely be at the core, but it's also really important to define, what you understand with privacy. So is privacy for you, for example, to be compliant with data protection laws, for example? That's, like let's say a not too strong form of privacy, or is it really, for example, to have similar privacy features as cash today, right? Which, as you mentioned perfectly, is that basically only the sender and the recipient know about the transaction, right? So no third party, no government, and nobody knows about the transaction. And of course, if you would allow this for a CBDC system, that could have negative impacts, because you would have basically issues when it comes to anti-money laundering checks, counter-terrorist financing, etc. So I think it's pretty clear that a fully anonymous payment system is not demanded, because it needs to be monitored and illicit activities have to be tracked. But what I also see, on the other hand, is that we do see the tendency that cash as a means of payments is getting less and less important in Europe, as I said, as a means of payments, right? Not as a store of value. And I could see a future that maybe in 10, 20, 30 years, like similar to Sweden or China, that cash payments are really, kind of marginalized, so that not all the shops accept cash anymore. And then people obviously also don't use cash as much as before, right? And then less shops accept it, and so on and so on. And I think that if we see this development, this would also mean that, full anonymity is gone if the CBDC does not at least provide some form of strong privacy. And what I'm personally am a big fan of is, to have basically the approach of cash today bring into CBDC. So this means until specific monetary thresholds, you stay completely anonymous. This is set by a regulator, right? So this can be 1,000, 2,000, 3,000, you name it. And if the threshold is exceeded, then you have to do KYC, right? You have to show your IDs, etc. Because on this side, you can basically monitor illicit activities on large scale, because you can check large money flows. But also for small payments, the individual freedom of people is basically preserved, because privacy is kind of a civil right here, right? So long story short, I think privacy is important. And I'm personally a big fan of such a system where you have fully anonymous payments, as I said, for small payments. And then, of course, you have to do all these KYC measures we know today for the mid-size or larger payments.
Thank you, Jonas. I know that Martin Bruns would very much like to comment on this.
Yeah, and I think this whole idea of privacy is almost a myth, because we already have digital money. Privacy doesn't exist in the digital money world. Visa can track your transactions, bank can track your transactions. So and for good reasons, right? Because you definitely do want to avoid money laundering. But I think I have a kind of sorry to disrupt this, but it's coming from a private sector, and Binance would like to disrupt things. I think I have a question here, because I'm just sort of puzzled by this conversation. I think this is the elephant in the room. So we already have digital money. We all use cards. These are not physical money. So maybe for the benefits of the audience, but I think also to have a good discussion. So how are the CBDCs really different from digital money, especially if they're not going to be blockchain based? Why is this such a big deal? And why is it taking such a long time for the central banks to build this up?
Petia would like to answer that question.
I have two of them. Wow.
Good stereo.
I guess Marcus may also want to add up, but let me firstly comment on the timing, because we are saying we tend in Europe to say, well, we are not so good, not so quick, not so anything. To be honest, when you look on the developments in the US and China and all other developments and evaluations of the Cbdc, Europe started fairly late, but we are fairly far. So if you compare with the quite some other projects, how they are developing, we should not be ashamed of us. We have done quite a good job. So I would just want to place this one with the timing maybe. And the second thing, the central bank business is not on fail quick, because imagine that you have your euro and it's just failed quick, and it is very quickly can be faked, and you cannot be sure that it's secure in your system. Banking system failed quick. That's nothing which we can risk. The trust in the euro system and in the financial system is a very important one, even for the private sector, I guess, because otherwise you would not have the financial intermediaries relying on the clear rules and the stability. Why digital euro is different from current payments instruments we have? Well, as I mentioned at the beginning, the digital euro is just the digital form of the cash we have today, if you want to imagine that. So basically, there's, of course, there will be, there is a serious discussion on compensation model and how much needs to be compensated to the intermediaries so they can distribute it, and what is the fair price and so on. But in fact, there is no commercial business model behind it. And that's meant, usually today, when we talk about innovations, we don't invent a new lights or a new chair or a new something. We compete on a business model side. That is the toughest competition. So in that sense, the digital euro is different by having completely different business model as commercial bank money or private money. That's not only commercial bank money. There can be also cryptocurrencies, right? Because for a good reason, private companies need to make profit, and that's good. They don't have a policy objective, we do. And they also don't need to serve all the citizens, we do. So I guess there are fundamental differences between a digital euro or Cbdc and a private payments means in electronic form.
So from a perspective of a user, right? Somebody who just uses them for payment. So what's the real benefit? I mean, again, coming from sorry to push this, from a technological end, right? The push and that's all the successful projects, they start with the customer need. This is a need that's not being currently addressed, or it's not being addressed well. So what is the need that the CBDCs can address? The digital money in the current form can.
Okay, I'm the moderator, but I will give me a little bit of my view here after been traveling to different parts of the world where my Visa card doesn't necessarily work as it works at home. Try to buy gas at an American gas station with a European Visa card. It works on some brands, not on some other brands. Be very practical. I'm going to have digital dollars in my wallet and pay with there instead, for example. Just saying. And my parents, they live in America for that matter. They come to Europe and they have problem using their American cards for payments in some places here. It'd be great for them to have digital euros. It fills a purpose. In this case, for traveling and tourism. And I could imagine it could fill purposes also commercially in transaction between companies.
Sorry to interrupt, but as far as I know, the digital euro is supposed to be based on the very same banks and the very same schemes that are operated already. So I cannot really foresee these benefits, but of course we will see.
I may start, and I guess, yeah, Marcus is already raising his hand. I guess I was mentioning that he may want to add it. The digital euro has no scheme, but Marcus, I may.
Let's give it Mark.
Yeah, thanks. Thanks a lot, guys. First, let me come back to the point with trust. The central bank currency, the point is trust at the end. And the best example that it generates trust are stable coins. What do stable coins do? They borrow the trust from central bank currencies simply by the fact that they base themselves on or underlie themselves with central bank money. So it is a complete different story when we talk about CBDC and some other crypto assets. It's not really comparable. It's coming from different parts of the world, and it is not yet there is no clear cut that we can say the digital euro will have inhering the same problems as we have today with our American cards using, because the idea currently is to build the digital euro on a digital euro scheme. That's the only way we can ensure that you can really trust that you can use it everywhere in Europe. And then, based on this scheme, banks and other supervised entities will be able to develop the products accordingly. But this scheme will ensure this acceptance all over Europe. That's our idea behind it, and that's how we are going to build it. And the idea is really for people to understand and to trust, yes, I can use this. By the way, there's cash for anonymity, because you brought this up. No one wants to get rid of cash. Cash will be there as long as people demand it. We will supply constant cash on a constant basis, and we will never tell anyone, look, guys, no, cash is now out. You have digital euro, by the way. No, you can use cash for your payments. You can use digital euro. We want to leave complete freedom to the people.
Thank you. Petia, did you want to say something more? You were sort of interrupted here, so I will give you the word back.
Yeah, well, Marcus said that there will be a scheme for digital euro. Just to make it clear in the room what that means, it doesn't mean that it's a better card or a better instant payment. It's an own scheme which will regulate, firstly, the entry criteria, which are the counterparties which are allowed to distribute it, how the digital euro will work, what are the different technical liability, etc. aspects of that. And that's a very, very important thing, because that ensures the trust and ensures also the reach of these payment methods. So we can be sure that everybody, also in a distant part of Europe, can pay with it. And that's not the same how today we have schemes and financial institutions providing digital payments, because they operate based on, let's say, private schemes. Even some of the schemes which are regulated in Europe, they're privately managed. And the acceptance of those schemes is mostly voluntarily. So you can decide, do I accept instant payments or not? I guess some of the banks do not do that. So there is a big difference in that. And I believe this difference will help us also to achieve the reach we are aiming at.
Yes, of course. A central bank currency will be legal tender. So in other words, it must be accepted. That's one of the advantages as I see it. Since the Chinese are very successful with their digital currency, what can we learn from China? Why don't we copy the Chinese concept? What are the fallbacks and drawbacks of it that makes it not copyable for Europe? Who would like to talk about that? Okay, Anikó, please.
Thank you. So actually, as Petra already highlighted, the Chinese started the project back in 2013. And so they invested quite a few years and energy into the system. And by 2020, they arrived to the phase when they started the piloting. And even though we see quite huge numbers from the Chinese authorities, when we divide them with the number of population, that tells us that only those schemes where the state provides free money to the citizens, so in the form of little digital red envelopes, this is the form when gets popularity. But in general, the Chinese population is sticking to the private solutions of Alipay and WeChat Pay because they know it, because they know that it is everywhere accepted, except for, so unfortunately half of the market is, or a little bit bigger with Alipay, and some smaller market shares with WeChat Pay. But anyway, any of the two solutions work in China. And so I do appreciate the results, but we cannot judge it as an overall success yet.
Anybody else would like to comment? Jonas?
Yeah, I would like to add just a few thoughts. I think, of course, we shouldn't apply one-to-one the same principles, right, and the same use cases. As we also said in this panel, it's like all CBDCs are different. But what I think is really interesting that we can learn is that it really needs a long time to test the CBDC infrastructure. So China is testing for 2.5 years, still ongoing, so still not launched on a global scale, which I think is important to keep in mind also for the Euro area. And second, that really also education is key. And I think this is also a great thing that we have this event here, because even in China, we have seen in recent data that I think it was 50% of the people did not even know what the CBDC is, right, and why they should use it, coming back to Martin's point. So this should be clarified. There should be education. There should be clear use cases, clear, benefits, as I said, compared to current existing payment methods. And then then adoption would also probably reach some good numbers, let's say, and it wouldn't flop in terms of that nobody would use it if it's too similar to current existing payment methods.
Yes, when it comes to financial literacy, Petia is our expert here, so I hope Petia will comment on this and the lack of knowledge of.
Thank you. Yes, indeed. So we have done an Austrian survey and asked people what they believe is CBDC, how much they know about it, and how much they trust about it. And we had really quite an interesting waking up result that the majority of them, so I think 90%, said they have no clue what's that about. And even few of them who knew, or more tech-savvy population who said, well, I don't know, but I would be interested to know. Then we asked further, and we figured out that basically people are not well educated on financial means. And if you really want to design something fit for future, it's important not just to ask the broader audience, but also to select those lead users who may bring you an ideas how this will be used. Because as Henry Ford said, if you ask people what they want, they would say faster horses. So that's more or less where we are. So our population wants faster horses, and it is our task, not only from the central banks, but also from the financial sector and from the ecosystem, to engage intensively with the idea to promote and bring understanding of what kind of services are there, what it can be, and which audience can benefit how. Just last sentence, because we say it's for inclusion, but we don't mean only unbanked. Unbanked people are very few in Central Europe, right? So who doesn't have an account? Very few. Even my son, who is 11, has an account and wants a card. A plastic card is better than the cash. But if you think about that a little bit broader, in people who are under care, all elderly people, people who need to be supported, which we do have a lot in Europe, they have accounts, but they still have other needs, and they may not be serviced well by the current services we do have. And here we do have a broader aspect of inclusion and financial literacy. So we do need to be very specific and to start an intensive communication from both sides, the public and private sector, in sync, instead of just discussing why that makes sense.
I see. So it's about usefulness. Isn't usefulness enough? Become with a digital currency, it's useful. People will adopt it and learn. That's not enough. We have to be proactive. And please, Martin.
More on this one. I think financial literacy is generally an issue wherever you look in Europe, in the US. It's much lower than we would hope. So particularly when it comes to a new technology, you have to be very, very proactive. And for example, at Binance, that's one of actually our core activities, is not just the trading, it's education. So Binance Academy, it's the biggest website, educational website about blockchain. And actually, we spend quite a lot of time, effort, and money on working with different universities, schools, even governments, even law enforcement on educating from private, from just financial literacy issues to I think another one is just preventing scams, financial fraud, particularly when it comes to new technology. People start, especially the vulnerables, are susceptible actually to new types of financial fraud. So indeed, 100%, I think this is a role not just for the public sector, but it's also a big role for the private sector. And as I said, it's something actually we take it very, very seriously at Binance. And actually, we just announced last week with the digital minister of France a joint initiative, in fact, to bring in literacy to particularly people, disadvantaged people from disadvantaged backgrounds, disadvantaged social backgrounds in France. But we would love to do this type of activities across Europe.
Very good, Martin. I mean, as an account holder at Binance, I get all this invitation for training and webinars and this and that. Unfortunately, I have a Slovak IP address. I always get it Slovak to me, so just delete them. Something to work on. In any case, yes, there have been too many frauds in cryptocurrencies and so on, and many families have lost their fortunes in different frauds and so on. So it's good if the central bank and the private initiatives works on these areas together, I think, as well. Any comments on that from the online panel when it comes to literacy and fraud?
Johan,
yes.
If I may, I would like to come back to Martin's point on the digital euro, if there is a case for it, because I think it's probably the core question. I think the answer is that, or the idea behind it is indeed to provide general public with easy access to central bank money, and to establish a means of payments which will be without liquidity risk and without credit risk. I am of the view it's still not decided that it should have also the status of legal tender. I think it's still a pending issue. So it should be something what is very like coins or banknotes. And I think there is a demand. So as I mentioned in my first intervention, it's also a demand-driven project. But I think what is also very important, and I would be interested on reaction on this, that it should be, and I think Markus has mentioned it, that it should be also an open model. So we should establish a flexible ecosystem, and it should be interoperable. There should be interoperability with the private solution and possibly also with other central bank currencies to achieve somehow cross-border use and cross-currency use. So I think this would be one very important element. Thank you.
I know that future-proofing is very important. I think that could be a question from Martin here. Future-proofing financial systems. What do you think?
Well, I think I already said my few words on this. Actually, just one word: blockchain.
Yes, blockchains. That's it. Okay, then we're clear on that. Future-proofing, Petia.
Well, as I said, we have to make sure it's for everybody accessible, and in any situation, it's simple and accessible. That's why we have also offline cases. A lot of people say, why you need offline case for digital euro? Because everybody should rely he can use his money in any situation without reading the small caps.
I completely agree there. That's why some people still print their boarding pass when they're flying, you know. And Anikó, what do you think about future-proofing?
I think this can be one of the most valid reasons for introducing a Cbdc, except for financial inclusion purposes. So this is the way how the central banks can lay the ground for market innovation and for making payments even less complicated and less stressful, and of course where additional functionalities can be embedded into a payment process with the help of blockchain, of course. And here I would just like to highlight that having the infrastructure itself doesn't necessarily will lead us to this outcome. So I'm talking about some experiences, for example, since March 2020 in Hungary, we have an instant payment system where the infrastructure is able to transmit money in 2 seconds from any banks to any other bank, because it's an obligatory system. So in principle, this could have been a huge challenge for the card schemes, but in practice, we haven't seen so much change since then in the way ordinary people are making their payments, because these new innovations are not coming out from the banks. They say that they invested enough into the infrastructure, and maybe in some years' time they will have new projects in this realm. So it has to be common standards, common let's say, product schemes or ideas also developed centrally. So in this phase, for example, we are working on a common QR code payment scheme or standard that can also enhance the usage of the instant payment. So having a future-proof infrastructure is point 0, and then to see these innovations growing, some additional effort is also needed.
Thank you, Anikó. We're soon running out of time, so I wonder if the online panel have some more remarks or things you would like to bring up that you didn't have a chance to say. This open for any of the topics.
I would like to, last point from my side, to pick up your question on the future-proofing, because future-proofing is definitely one of the biggest challenges to develop something now. And as several others, including Petia, said, there is no second try. We have to get it right at the beginning. It has to be a proper product working in the use cases we specified. But that's also the reason why we talk extensively throughout the whole project with all different kind of market experts. We talk with all market sides, from banks up to the consumer, also all kind of consumers. We try to cover the tech-savvy, the low income, the unbanked, to really get this very broad view for our product or for the final product, which will be developed by the market with the market. And that's also the idea, how to ensure this future-proofing. If the market, we don't know everything as central banks. We don't believe this. So that's why we want to tap all these resources out there and really go with all together, hand by hand, and move along there.
Thank you, Marcus. Peter?
Thank you, Johan. Just one point which I think is also important when we are discussing digital currency in general, and I think it's very important when it's come to the development of digital euro, and that is that we should try to establish or to create an environmentally sustainable digital euro. This is something that is, I think, very, very important, and we may have also on this some reflection, but it's a key priority also when it's come to digital euro.
Thank you, Peter.
And maybe also to just add one sentence, I think it's also important to think a little bit outside the box. We didn't talk about crypto, DeFi, all this stuff today a lot, because it's two different topics. And I also mostly agree, but there are also central banks that look into how to integrate Cbdc with DeFi, how to enable IoT payments with Cbdc. I'm not saying that this should be a Cbdc like included in every Cbdc, but at least you should look at it. And then also, coming back to what Martin said, then also DLT, might bring more benefits than currently existing forms of money. So just, this little bit outside the box thinking, of course, even if the project is very complex.
Thank you. And for the panelists here on the floor, any last remarks? Anything you would like to mention before we finish? My Slido app died on the phone, so I cannot get any questions from the audience through the Slido app. So we do it the old-fashioned way. If anybody have any questions, I will come over with the microphone. This one seems to work.
Thank you. I heard that there's an intention to use cryptocurrencies for regular payments, so create payment cards that will be acceptable in shops. I guess also with digital euro, there's such an intention to have it widely spread in usage. How far are we from such payment cards to be applied in practice? Thank you.
Well, we already have it, right? With Binance Pay, you can basically have your Visa or MasterCard just linked to your Binance account where you hold your crypto, and you can pay like you would pay from a normal bank account, except that it comes out of your crypto balance.
Is it also acceptable in Slovakia, for example?
I mean, wherever your Visa and MasterCard is accepted.
But
So
you're
then
not
I'm
paying
gonna
with the
use it.
cryptocurrency. You pay with euros. Your cryptocurrency is sold for euros, and or
That's actually true. So indeed, the settlement currency with which you settle, in fact, it's dollar,
okay.
because we don't have euro stablecoin or central bank digital currency. So this is again, when I speak about this urgency, I think there is a real urgency that if Europe doesn't want to fall behind in the next way of these financial technologies, we really need to speed up. And I think since it's been taking so long for the central bank, sorry to be provocative again, this is why there's now a role for a private sector to come in. And I mean, if you just look at a stable coin and think about them as a kind of a reserve currency for the crypto economy, right now the dollar is, I think, roughly 40-45% of reserve currencies globally fiat. Euro is about 20%. No, I don't think so. But mediated as it may, even if it were 30%, it's less than 1% in crypto, 99% or 98% dollar.
Well, I don't think that depends on whether you have digital currency or not, because there is no digital dollar today as well. So I guess there are different reasons for the fact that you have a scheme in Visa and MasterCard converting crypto assets to dollar and not to euro, or however you take it. But that's have to be looked at a scheme which facilitates you to use the POS infrastructure and the cards rails to make payments with crypto or not. When talking about the digital euro, yes, we have 5 use cases. Marcus can elaborate on that maybe in detail. One of that is offline use case. And in this offline use case, we would like to explore how we pay offline in case there is no internet connection and so on. But also one of the cases is paying on a point of sale, which is actually the classical card example you gave. And here we are learning from different examples. One of them, China, and have explored very much which kind of resilience and simplicity can bring to use also QR codes for paying on the point of sale. So there would be, so I'm not sure that will be just cards. Most probably there will be different technologies as well. But if I interpret how you can pay on the point of sale, then yes, there will be possible with the digital euro once decided. Yeah.
Any more questions from the audience? We have time for one more question.
Thank you. So this is also very interesting because as far as I'm aware, this upcoming MiCA regulation, also one of the things it at least considered, I'm not pretty sure how it may be changed recently, but it was a requirement that the stable coins supported by other currency than euro will be sort of restricted in the Eurozone, wasn't it? One of the points of the MiCA regulation.
Oh yes, oh yeah.
Yeah, so there are restrictions on using non-euro backed stablecoins. There's a volume limit, both in terms of transactions and overall volume per day. I think the idea was effectively to prevent non-euro based currencies like Libra in the Eurozone. There were some unintended consequences. The way it's designed right now is basically will completely destroy any trading in Europe. But I think the presidency is aware of it, the commission is aware of it, so there might be some changes to it. But I think the restrictions will definitely stay on using non-euro based stablecoins as a means of payments. They might just hopefully more sort of infrastructure like uses stablecoin.
So isn't it a space actually to be filled by a digital euro?
Yeah, well, I think again, going back to the original idea that I don't think these are competitive, right? I mean, there are use cases for both of them, and I think to a large extent they are almost mutually replaceable. So again, this is why this push for let's just get it out there fast.
We took the note on fast.
Yes.
I guess the experts from the National Bank of Slovakia have more to say on Mika.
Probably, I think so. And the next panel will be about Mika, actually. The main topic for the next panel, which will start at 11. If nobody have any more questions or remarks, I would like to thank the panel for the great discussion. You did great today, and I hope the audience learned much more about digital currency backed by the central bank or issued by the central bank even. Thank you so much, Anikó, Petia, Martin. Me and the names, very sorry about Jonas, Marcus, and Peter, of course. Sorry about that, Peter. I just, yes, very good. Thank you for rescuing me there. So thank you very much.